Good, yeah, it's Joe and I come back at you with another video. So for this video, this is going to be the trade recap for today, right? As you can see in the bottom right, it is May 30th. Uh Thursday, May 30th. Um we just finished with the trading day. It's 120. I'm based in New York, so um all of my trading view charts is in New York time. So here we have the two charts on the left, NAS 100 on the right, SPX. So now jumping into bias, my previous video where I did the breakdown for the day prior, I did the breakdown for Wednesday the 29th. I basically said that I had a bullish bias on NAS and a bearish bias for SPX. Now, that still is in effect, right? Because NAS prices have been going up and up and up, and no structure point was ever broken. Obviously, you see these two bearish candles, but structure was never broken, so there's no reason for me to stray away from my bullish bias for NAS. For SPX, right, I believe it is bearish because this candle here wicked above what appears to be equal highs or quote unquote double top, right? It snagged liquidity. Then with this candle, it came down and broke structure right here. And then as you can see, there was a slight retracement and then price came down and once again broke structure again to the downside. So you're just seeing market structure shifts bearishly, which means that in my opinion, NAS bullish, SPX bearish. So once again, the biases still stand. That the two pairs are different as far as their bias. Now, if we jump into the economic calendar, seeing news event at 8:30, we're seeing news event at 10, and obviously we have the 9:30 a.m. stock market open. So those are the three important times that you want to be aware of when trading. So if we jump into the 15-minute time frame, I have both pairs here at 8:30, and then we have the daily bias written here. So for NAS bullish, right? SPX bearish. Make this a little bigger. So now we want to mark the liquidity pools at 8:30. So this large candle here, this large bullish candle for both pairs, this is 8:30. So I'll put the vertical line at 8:30 for both sides so we can see what we're talking about. And now we want to look to the left and to the right. Sorry, we want to look to the left of 8:30 for both pairs and mark the most obvious swing high and swing low for our buy side and sell side liquidity. So to the left, the most obvious swing high is this level right here that I'll mark buy side liquidity. Right, as you can see to the left, this is a candle all by itself. And same idea to the left, the most obvious swing low. So this is buy side and sell side liquidity, both marked here. Same idea for this pair. Um, yeah, so for this pair, this didn't make a swing. So we look further to the left, and then if we look to the left here, it's this level. So I'll just make it easier for you guys. I'll just put a horizontal line so you can see, right? What's higher than this point to the left? That's a swing, obviously here. So mark it right here. It's our buy side liquidity. And then sell side liquidity, if you want it, like obviously you also want to see equal highs and equal lows because then those are obvious liquidity pools. So clear as day, four candles that the lows are 100% identical, and this is a 15-minute time frame, right? So that is clearly a lot of liquidity built up at this level. So clear as day that this is sell side liquidity right here, and this is what we actually want to see. This is a great sign. So once we got that out of the way, we'll jump into the 1 minute time frame. And of course, for both pairs, buy side liquidity was blasted right through with the 8:30 news event and the 8:30 hunt. So this blasted through price. I'll move this here. Perfect. So buy side got blasted right through. And so now at this point, we just want to see what happens at the 9:30 open. So we'll just go with NAS first. Okay, right. We'll just fast forward a little bit until 9:30. So this large bearish candle right here, and I'll just focus on this pair first, right? So we can have all the attention. That's pretty much how my setup is, having those two pairs side by side, and I just watch both of them because I know what I'm looking for in both pairs. Um, but we'll just do NAS first so you guys can see why I didn't do anything with NAS and I took a trade on SPX. So NAS, we're bullish, right? So because we're bullish, we want to see sell side liquidity get taken, right? This is the 9:30 open here, and we've marked out sell side liquidity here. So we want sell side liquidity to get purged, to get taken, and then we want price to push up to clear this high. Ideally, this would be our final target. I know we took buy side liquidity already up here, which is fine. But now because it pierced through and left this high, this is the new buy side liquidity target as a final target. So I want to see price come down. I'll just get rid of this here. So I want to see price come down and clear this level here, right? Clear this level here, and then eventually make its way up and take buy side because we're bullish, right? We want to only look for buys. So in order for us to look for buys, we want to see sell side get taken. We want to see a dip, and then we want to buy low, and then sell it as we make our way up. So that's what I'm looking for. If price doesn't come down and clear the sell side liquidity after 9:30, there's literally nothing for me to do. Like there's nothing, right? So price does come down and clear. So now, in this case, we essentially are looking for a push higher. We're looking for a push higher. Like we want price to eventually make a move and make its way up so we can like take a trade. Obviously we need structures to be broken. So that's cool that price came down and started showing us aggressive bullish candles, but there has not been any sort of structure break, right? Like we want a prior structure point to get taken. Essentially, like this is the most recent structure point that we would need to get taken. And already, the reason why I'm not feeling this trade, like just how it's already panning out, is because if price comes up and clears this high right here, then it's not like price is gonna come and then just, just tap. It is possible that I could just tap right above it, but then look how close this level is compared to like our final target, right? Like I'm already thinking that if a trade were to present itself, then it's like I would have a big stop loss and the risk to reward wouldn't be that good. Like it wouldn't really be an ideal setup. So I'm already not feeling how Naz is delivering, but obviously we'll just keep watching it. And the reason why I didn't take a trade, right, is because this is the last structure point before the liquidity grab, and price has yet to come up past this wick. So price is literally just consolidating. Obviously, it came down and swiped this low again, but with price doing that, then this is now the last structure point, right? So you can see price comes down again, clears this low again, market, right? This low got taken, this low got taken, but now the last structure point is here. Gets taken again, the last structure point. So you can see I'm literally just stalking price and nothing is really materializing, right? If I just follow price down, nothing is materializing. This is still the last structure point, and boom, we hit 11 o'clock. So obviously no structure point was ever taken. So there was never any opportunity for me to enter NAS. So you basically just sat on your hands for this pair. There was literally nothing for you to do, right? Now, if we focus on S&P, we are bearish on this pair. So because we saw that at 8:30 price came and took, buy side liquidity, then that's fine. We want to see what happens as we approach 9:30. So I'll just move this, I guess here, right? So as we get close to 9:30, 28. Okay, so here we're at 929 to 930. So at this point, because we are bearish, we want to see buy side liquidity get taken. But more importantly, after 930, from 930 to 11, we want to see price. If we're bearish, we want it to make the highest high of the session. And if we're bullish, we want it to make the lowest low of the session. Or I guess you could say the high or the low of the session, right? So in this case, because I'm bearish, what is the highest high of the session? Clearly this wick right here. So either you can mark this as buy side liquidity, but for me, I also have it say waiting for another push above. So literally, I am just sitting on my hands, not doing anything until I wait for another push above this level because I want to see this liquidity get taken. If you want to sort of like clear up the chart a little bit, you can get rid of that buy side liquidity ray, so we can like get rid of clutter as we go on. In this case, waiting for this to get rated. Otherwise, I'm not doing anything. So this candle right here, this is the 930 open. So now we're just being patient. Boom. 2 minutes later, this high gets cleared with this candle up here, which is a great sign. So this got taken. So now I'm looking for the most obvious swing low, right? The last structure point. So this is the point that I'm looking at right here. So again, liquidity got taken again. So now we're just waiting for a push, ideally under this level. And we want to see a fair value gap. So massive bearish candle and another massive candle. And what happens? It leaves a gap here, which instantly, the second this candle goes and trades under this last swing point, it doesn't need to close under. The second it goes one pipette or one pip under this level, it is considered a market structure shift. So once I saw this market structure shift, I am looking for the displacement low, the displacement high, right? This range. I'm asking myself, is there a fair value gap in this range? And the answer is yes, right? Clear as day. This fair value gap right here falls within the larger shaded box. So we have all of our confirmations met of us being bearish on a daily time frame, right? And because we're bearish, we want to see buy side liquidity get taken. Did buy side liquidity get taken? Yes, it got taken with this spike up that took out the buy stops up here. So liquidity got taken. Then we want to see break of structure. The structure break? Yes, where the light bulb's at. Structure came down and broke it. Fair value gap. Do we see a fair value gap? Yes. So now all of our confirmations are met. And now I like using rays and like color coding things, right? So this pink here, this would be my stop loss. This other pink here, this would be my entry. Take a short. Stop loss above this level. And our final target down here. So 1 to 58, obviously not the best risk to reward. At the bare minimum, I want a 1 to 1, right? I'm happier to take a 1 to 58 risk to reward. Obviously not the most ideal scenario, but nonetheless, it would still be more than a 1 to 1, right? So this is perfectly fine as far as everything. And so it's clear as day why we want this as our final target, because as you can see, it's not by accident that the market did this. Look how many candles: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Like, this is almost 20 candles that all just so happen to stop at the same exact perfect number. And that's done on purpose to manipulate traders to get them in, right? To to have traders put sell stops here. Like, obviously these traders are buying, but like also other traders to put sell stops here, like breakout traders that are expecting price to go lower. So clear as day, that is a very obvious target. That is low hanging fruit. That is literally easy for the market to get to. So this is my trade setup. Obviously, we skip it one more candle. Okay, well, we can't use this fair value gap because according to our confirmations, the fair value gap has to fit within the displacement range. And obviously, this grayed out box does not fit inside the pink box. And I change the color just so you guys can see it. So this is literally our only trade. Obviously, with this 2 minute candle, you could have taking a trade here because this fair value gap on the 2 minute lines up with the confirmations, but it would have been less than a 1 to 1. So for me, because this is like a big stop loss and the target is very reachable, I'm perfectly fine with taking this. This is my entry is gonna be at and my final target. So basically, skip another candle. So the other thing that I want you guys to know. So after 9:30, clearly buy side was taken. Great. All of our confirmations were great. Was checked off. Great. However, once again, Forex Factory, there's still another news event at 10 a.m. And if we look at the time right now, it is 9:38. So when I took this trade, I went in with half of my normal risk. Like if I'm risking 2% a trade, I either put in a sell limit order or I'm ready to market execute using 1% risk. And that's because I don't want to get aggressive if there's also a news event that didn't happen because we don't know what's going to happen for that news event, right? This calendar is telling us that we can, for the most part, expect a some sort of movement, right? Because it's a red folder, right? We can expect some sort of movement at 10 o'clock. So I went in with half risk because I don't want a news event to happen and you know price taps me and news event happen and then it just flies up and with slippage I take a bigger loss than I need to, right? So this is why I'm being a responsible trader, keeping in mind that all of my confirmation were meant for a trade. So I'm gonna take the trade, right? If price enters it, I'm gonna take the trade. But if the trade happens before the 10 o'clock news, then I'm going in with half my risk. If the trade happens, after 10 o'clock, like after the news event happened, like say like 5 minutes after the news event, then at that point you could go in with normal risk. So that was my logic there, right? There, there's no rush. Like for me, trading, right? There's a lot of variables at play, and obviously, priority number one is protect your account, protect your balance. So this is why if it activates before 10 o'clock, I go in with half risk. So this is my trade idea. All my confirmations were met. So boom, with this candle here at 9:40, it tagged me into the trade. So in this moment, I'm officially in the trade at half of my normal risk. So if I go on the 5 minute time frame, I'm seeing that this is after the trade activate. This right here is the most recent or obvious 5 minute swing low. So I like to move my stop loss after a 5 minute swing low. If I'm going for a sell, if I'm in a sell, right? For a 5 minute swing low, um, gets blasted through. So here I like to mark any of my targets in purple. So this level here is where I'll put my stop loss to break even, right? And or I can put it in the middle, right? For you guys. Stop loss to break even. So if price comes on and makes his way here, I'll move my stop loss to break even. Obviously, this level is super close to this level down here. It's literally one, like about 1.5 pips away. So I'm also fine with taking partials, right? I can take 80% off because at this point, if it hits this target, it's most likely going to hit this low here. And this is a very achievable target. This is low hanging fruit. So for me, it's like if the target is super close, I'd rather just take a massive partial so that in the rare case that price comes down, hits this level, but doesn't go here and reverse against me, I still took off the majority of the position. So there's no need for me to worry. I pretty much, because of 1.5, 1 to 1.5 risk reward, taking off 80% down here, I basically made at least one risk to reward ratio. So at least I pretty much made my full return back on this trade. However much I risked, I pretty much made it back on this trade alone. Um, so that's why. So now we'll just play it, and then you'll see what happens with price. Right, as you can see, price keeps coming up and returning to this fair value gap. And here, this next candle, this is the 10 o'clock news candle. So this is the candle that starts this news event of pending home sales. Now, for me, I'm still feeling good about the trade because we have a big stop loss. Like the trade has a lot of room to breathe, and I'm not gonna move my stop loss until it gets to this level. So the trade has a lot of room to breathe. So all we do now, we sit and we just submit, right? Because we have our bias, our daily bias bearish. We're trading in alignment with the bias. All of our confirmations were met of liquidity being taken, an aggressive break of structure with a massive fair value gap that's left, and then our final target is obvious liquidity down here. Obvious. So is it possible that we could lose this trade? Yes, it's very possible. Anything can happen. There's no guarantees when you're trading, but that like we're trading in alignment with the market, and all of the signs are pointing to that price wants to go lower. So we have the edge. So this is why we're able to be confident in this trade that it's going to pan out, right? No guarantee that it will, but we have confidence. So we're seeing that price is just consolidating and it's pushing deeper um, towards our stop loss. So we're just in heavy drawdown. And then a few minutes later at 10:09, we see an aggressive bearish candle, another aggressive bearish candle, and then boom, literally like when we're in drawdown, 3 minutes later, final target got smacked. So literally like this all happened within seconds of one another. Price came down, hit the purple, so I instantly moved my stop loss to break even, cleared 80%, and a couple seconds later, the final target got blasted through. So that was a trade. Obviously, we had to weather some drawdown here, a little more drawdown here, more drawdown here, but then ultimately price came down, blasted through final target. So your trade was a success and banked in profit. So this is how the market operates. This is how, it's honestly how it functions, right? And obviously it blasts through like a little further down and even clears like these other liquidity levels. Um, this is the market for what it is, right? And this is a major paradigm shift because a lot of people are taught to believe, based on like free education and all these courses that they find on YouTube, whatnot, that they believe that the market is buying and selling pressure, and that you know the market is 100% random and all these things. But like this phenomena, this theory of liquidity, like when you have an understanding of liquidity and understand the story of the market as far as what's going on and what the market is most likely to do, like you'll soon realize that a lot of these things repeat and it happens like often. And just so I can, you know, break this down for you guys so you can see what's actually happening, right? This is what's happening. The market is doing here because at this level up here, here market, yeah, because it's this wick here and this wick here that came up above buy side. What the market is actually doing, it's generating buy side liquidity. So up here is buy stops, buy stops. A lot of these large institutions, these large firms, they place buy stops because they're under the belief that, a lot of traders, they see this and they're like, okay, well, this is resistance, this level up here. I'm gonna put it right here. Like this has to be resistance because if you look at here, price is wicking and it doesn't want to go higher. This has to be resistance. So institutions, they'll say, okay, well, if price trades above this level, right? If price somehow comes above this level, then we have to be bullish because structure broke, this level broke. So now we're bullish and then we expect price to go down to this level and bounce up. Then you also have breakout traders, which breakout traders, once price moves above a level here, they'll instantly start buying because they're anticipating price to continue trending in that direction. So those are the people that the market is after. So the reason why up here this is buy side liquidity is because people, when price goes above this level, they start buying, and that's perfect for the market. That is perfect for the market because when it goes above this level, just imagine thousands, 10,000, a million buy orders for the market. They have buy orders in the market, which means that's the perfect counter for them to sell. So when you're seeing this slash up, it's not because price actually wants to go above this level is because price needs buy orders so that they can sell against the buy orders. So then the market can put its sell orders into the market. And then when it sold up here, it basically sold at the best price because it's at the highest point of the session. This is the highest point of the session. This is the high of the session. So they got the best deal on the sell. So they're selling up here. So then that's why after they sell, they're pushing price down. That's why price flew down so aggressively and broke the low, right? Which is a market structure shift and left a big gap because price moved down so rapidly, so aggressively that it left a gap in price here. And the market has a tendency to want to fill the gap. So price comes down aggressively, then it has to like, slowly make its way back up, fill the gap, and then push down aggressively again. So then when price pushed down aggressively, because they sold at this level, in order for them to get out of their sell positions, they have to buy it back. So in order for them to buy it back, they need sell positions in the market. And where's the sell positions? Right here. Because all the breakout traders, when they see price go under this level, they're going to begin selling. Any large institutional firms that have sell stops in place here, thinking that when price goes down, is going to continue going down selling. They have sell stops in place. Look how perfect, look how smooth it is. It's like 20 candles that are like at the same spot. It's not by accident. So then the second price comes down and slashes through this level here, right? Slashes through sell side liquidity. All that is price buying back, right? Getting out of their positions because they sold up here. So you have all this sell side liquidity. Price came down, slash to all the sell side liquidity. So you have a million sell orders flooding in. So they'll just buy back their positions here and get out of their position. So that is literally what's happening. That's the story of the market. And the reason why I took the trade on SPX is because we are bearish, right? We're bearish on a daily time frame. So I'm looking for sells. So me taking the sell, I'm trading in alignment with the daily time frame, and I'm also trading in alignment with the story, the intraday story of the market. The market exists because the market makers, the people in charge of the market, right, that are controlling everything, they're here to make money. So in order for them to make money, there has to be traders on the other end losing. There has to be someone losing in order for someone to win in this market. That's why it's buy and sell. It's an exchange. It's literally called trading for a reason. You need like opposing liquidity, opposing orders in order for an order to be filled. You need someone on each end, a buy and a sell, for them to get paired. So you have to see the market as pairing. You have like that's how you have to interpret the market in order for you to trade alignment with the market, to understand the story of what's being presented to you. And so this is why when this was unfolding, it was easy for me to spot it because I've trained my eye to see this. Like I've seen this story unfold over the many weeks, the many months, like at least a year into this, right? Like as far as me trading, like from the beginning of my journey to now, it's been 4 years. Not that I've been learning these exact concepts for 4 years. These concepts I've been learning probably closer to like 2 years, but this is what I spent so much time to learn for because this is the story of the market. This is what it is, right? It's just I'm peeling the veil back for you guys to see it for what it actually is. So that's what's actually happening in the marketplace. So that's why when I took the trade, when I see it unfolding, I was confident that it will hit the target. And obviously we had to weather some drawdown, we had to weather the storm, but then ultimately price just blasted right through, right? And obviously this movement up here, right? This was like some consolidation, right? Probably to just trick traders into thinking price was gonna go higher, you know, that like, oh yeah, we're bullish, look, we're moving up, we're moving up, and then look what happens here. Look how aggressive it just falls like a knife, like just 3, 4, 5 candles straight, just bearish, boom, and it just obliterates. So if any traders bought and put their stop losses under here, 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 or if you're a trader that took a trade without a stop loss, you were buying and you didn't have a stop loss, better luck next time, right? Because you took a massive loss here. So that's what it is when understanding the market. And you can see here, right, even after price slashed the liquidity and went down, look how many bearish candles. 1, 2, 3, 4. It was pretty much 4 bearish candles back to back to back, aggressive. Like it just looks like literally like a knife falling, slashing right through everything. So like it went through a momentum with with speed, and then when it was retracing, it was just slowly going back up, and then boom again, it just blasted right through. So this is the market for what it is. This is the recap for Thursday, May 30th. Um, if you took that trade here with the fair value gap, hopefully you took a sell, and you know got a win. So that's that. If you enjoy the video, do leave a like, subscribe, comment down below any thoughts you might have, any any questions you might have with the strategy or just trading in general. I'm happy to help. But this is my strategy, this is how I trade, and this is how I see the market. I see the market for what it is. So see you guys in the next recap soon. Peace.